The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the April 21st, terrific Thursday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure that you and I have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstances of these markets. What the bulls and the bears, the buyers and the sellers are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone at any time. Dial on in, 877-927-6648, internationally 727-445-1044. Would love to hear from you, see what you're looking at. We'll put as many tools and indicators to maybe add to what it is that you are thinking out there. So give me a call at any time. Of course, you can always send me an email, steve@tfnn.com. Sometimes they come through in time, sometimes they don't. And, of course, inside our Tiger's Den, instant message away. So let's go ahead and get this show started on this terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading down 80 points, trading at 18,016. S&P is off 7 points at 2094. NASDAQ Composite down 4 at 4943. The Russell 2000 off 3.5 points at 1138. 1138. You've got gold off $3. Silver's down 4 pennies. Light sweet crude is back 80 cents. So we're going to have to check in on that, right? We got light sweet crude trading down. We've got the market trading down right now. So we know that correlation. So we've got to go look for different levels of support, resistance, the whole 9 yards out there. Leading the charge here to the downside, upside. Well, downside. Let's go downside first. You've got Alliance Data Systems, ADS, that's off $14, about 6.5%. Lithium Motors down nearly $11, about 12%. Sarepta Therapeutics, what a trip that stock is, 46% to the downside. That's off $9. Melanix Technologies down about 7, that's 12%. True Blue, they're having a blue day, down 25%, off nearly $7 out there. Las Vegas Sands down about 9%. Intrexon Corp down 19%, Silicom down 17%. So we've got some big movers to the downside. How about that? Both point wise as well as percentage wise. Now to the upside, you've got Valmont Industries. That's up nearly 12%, about $15. Biogen is up $11. It's one of the top 5 weightings inside the IBB. That's up 4%. ServiceNow, NOW is a ticker symbol, up 14%, up $9 and change. Google's up $5. I believe they are reporting after the bell tonight. Palo Alto Networks is up $4.50. That's about 3% out there. Eagle Pharmaceuticals, they must have it's Crestwood Equity Partners, CEQP. It's up 44%. Maybe it's a buyout or something. It says some type of joint venture consolidation. Okay, so we won't really spend too much time there. Okay, so let's go take a look at the markets. Let's go see, what the markets are communicating to you and I as we speak right now. So we're off about 82 points. Let's first go check in on our 10-minute charts out here. We can see that earlier this morning at the open, and that's where my cursor is on the left-hand side. We're taking a look at the ES Mini. We saw price moving down. Right at the open, you had about 70,000 contracts that sold off. When it made the low out here, where there was a little bullish reversal signal as well at 10 a.m., between 10 and 10:10, you had 59,000 contracts. And I'll go ahead and put this doesn't grab it exactly. It's really a bummer that it doesn't, but it gives you a pretty good idea of where the volume line is. You can see as price has passed this level, right here, you can see that we're down with lighter volume out here. And that's a 2089.25 area. That's on the ES Mini. Now, can you go through a swing point without volume and continue lower? Yeah, you absolutely can. But what we do know right now is that the ES Mini is pushed lower. It's trying maybe to bounce back and get above that level, but it's pushed lower without any kind of momentum behind it. Now, the NASDAQ has been the weaker of the indices. And what's interesting about the NASDAQ is it's only made a retracement of its move off of its low out here at about 950, between 950 and 955. If we take a look at retracement, I don't know which level it is, 0.618, 0.786, or maybe neither. But let's go from the low to the high. We're going to see that basically price got down to about a 0.786 retracement level. And volume-wise, you can see that at these lows out here, come on, work with me. There we go. At the low, you had volume. Even if I just take that lowest swing points, which we will, you had 7,300 contracts, and all the moves lower have been really on light volume out here. So yes, you've got the market moving to the downside, but do we have any confirmation that sellers are just egging to get out the door? We don't. We don't have that, at least just yet, at 1:12 in the afternoon. Okay, so that's the first place that we start. I think the second place that we go look is let's go see what's going on with light sweet crude. We know that directional correlation here. We've got that chart up on our screen. So we know that typically that the market, who's the dog, who's the tail? The dog out here is light sweet crude. I believe the dog is light sweet crude. I mean that in a positive, in an endearing way. But and the tail is the ES Mini. Directional correlation, not tick for tat out here. And so we're looking for levels of support. Now, the interesting thing here, as we look at these are 30-minute charts that we're looking at. So we've gone from a 10-minute to a 30-minute time frame out here. The light sweet crude here is not below its most recent market profile low. So the level we want to be watching is 43.19. Where does light sweet crude have some significant support? Should be at 42.06, which is the TAS weekly profile out there. The ES Mini, as we can see, has broken back down below its green line. That's its weekly profile out here. And this says that, you can get down to that point of control level around 2082.45. And that may be where things are targeted as we take a look at the ES Mini. Remember, directional correlation, that means the ES Mini can move further than what light sweet crude is, vice versa out here. But we know that this is still alive and well out here, and why we go take a look at what's going on. Now, if we see light sweet crude, instead of breaking down below the bottom of that box at 43.19, take out the top, which is 43.91, the ES Mini is not going to stay down, or should not stay down for the account out there. So in order for these markets to continue moving lower, and we won't worry about the volume aspect of it, you really need to see light sweet crude probably break the 43.19 level. That would be a place that I would look. Okay, so now we've gone from 10-minute to 30-minute. Let's go ahead and take a look at what's going on with regard to our advanced decline oscillator out here. And as we take a look at it, those happen to be the three bottom panels on my three panels from the left-hand side, that being the New York Stock Exchange. Its reading is at positive 67.84. It's above zero. NASDAQ Composite, it's above zero. Dow, it's above zero. So we don't have a confirmation. When it gets below zero, that tells us who's in control of the game out here. And at this stage, it is still the buyers in control of the game. Can that move below zero by the end of the day? Yeah. We have a really bad close out there. We just have a lot of net declining issues. I don't know whether we will or we won't. But we don't have the confirming messages that we'd like to see. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
5 minutes. 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 5 minutes TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 79, S&P is off 8. Question that has come in here is, Steve, listening to your show, can you please give me an entry level and stop level for SPLV for my 401k account? So SPLV, this says that this is, I'm not familiar with this instrument. This says that this is the, well, that's a weird candle on August 24th. If you assume that that's real, take a look at that. Let me turn off these profiles here for a moment. So SPLV says it's the PowerShares S&P low volatility portfolio. Now, the very first thing, especially since I'm not that familiar with this instrument or not familiar at all, is you've got to go figure out what the heck is this. And you know, and I went to the internet, pulled up this is a PowerShares fund, clearly, and it says that it is a low. Well, let me see if I can read to you. Where did it go? Shoot, I went to a different page out here. So what does it mean, a low volatility portfolio? So this is not mimicking the S&P 500. Instead, they have their own group of stocks out here. So their largest weighting, they say, which is 22.2% is consumer staples. Consumer staples is not 22% of the S&P 500. So I've got companies like Coca-Cola. That makes up the largest weighting within inside that sector. PepsiCo, General Mills, Cisco, Church & Dwight, Kellogg, Clorox, and they have a total of, I don't see what the actual number is, of stocks within inside that category. Their next heavy weighting is in financials, so you really want to be paying attention to what's going on there. Percentage-wise, Berkshire Hathaway, Aflac, Torchmark, Chubb, Marsh and McLennan happen to be the top 5. I don't believe those are the top 5 inside of the XLF out there. So really, in order to truly answer this question, I would have to, especially if you're talking about your long-term account, I would have to really go see what those individual stocks are doing and understand. You've got industrials, 16.3%, healthcare, 14%. Utilities represent about 13% out here. So let's just say, okay, I don't have all that data. Let me try to answer the question. Now, when I get a question like that that's looking for a 401k or retirement account kind of a deal out here, you know, daily almost doesn't make sense to look at, right? It's a long-term type of trade. My response to that would really be the following. Let me open up my newsletter. That's probably going to be the That's probably going to be the easier way to do that. So give me a moment, because I don't think I have this chart anyplace else. So give me just a second to do that. We'll see if I can get it all the way down here. The answer to that question, when is the best time to put long-term money together? Put long-term money into the markets. That's really what I believe would be the question when you're talking about a 401k account. And that's going to be taking a look at this chart right here. Okay? This chart here, which is this is over the last 84 years out here. So this is the Dow during the last 84 years and what it tends to do on average out here. And what we know is the single best time to go ahead and put money to work inside the markets is the end of January, early February. You're always looking for some type of bottom that forms right around then. That is the absolute best time. Now, if we've got a total change in trend inside a market, and we don't have that as we speak right now, then we'll go ahead and take a look at a different chart out here. But at this stage of the game, the trend is still our friend. The trend is still to the upside, and the single best time to put that money to work is the end of January, early February. You should always anticipate that the market's going to go ahead and sell off sometime at the end of the year, the beginning of the current calendar year cycle. That's just what it does on average. Then what happens is the market moves up into the end of April, the beginning of May. That would take us to about right here. So just simply from a analog standpoint and a consistency standpoint and what the market does over the last 84 years, there's no chance I'm going to suggest that you go ahead and put that money to work now. It's long-term money. I just simply wouldn't do that. It doesn't make sense. There's no probability that is on your side in order to be able to do that. So when is it that the next best time to go ahead and put long-term money together? That's really simple. It becomes sometime in October. It's the end of September, the middle of October. Sometimes it can stretch, for a few weeks, one or the other. But basically, we should be anticipating the market is going to make some type of topping-ish pattern out here. We're going to go ahead and move sideways for a bit. We're then going to see, a decent decline into about the time frame of about the middle of June, and another move up into the July 4th-ish type time frame sometime in July. And that's when things ought to really start moving here to the downside. So there are really two times of the year that you should be looking to put long-term money at work, one being at the end of January and the second being in October. So I hope that answers our viewers' question out here. But if you're chomping at the bit, don't chomp at the bit. There's no probability that I can see that makes sense to go ahead and put that money to work on April 21st, knowing that we're coming into that sell in May type of cycle. Now, let's assume that we do get this top. Maybe it's in today. Maybe that's the message that we're getting here. I don't have the confirming signals that is the case, not just yet, but at the end of the day, we might have those signals. Where is it that this could pull back to? I don't know. Where could it pull back to? Well, my eyes always go to the prior swing point. And in the case of SPLV, that says February 11th. Maybe it's a retracement. Maybe it's a market profile, which is 39.28, that holds support. But I don't think so. I don't think that that's where this will be trading when you get into October of next year. So, at this stage of the game, to really answer that question with conviction, sincerity, and honesty, keep your powder dry. Keep it on the sidelines out here, and instead look for some nice decline into the October timeframe out there. So I hope that helps out our listener. Another question that came in was asking me about, are the large commercial traders ever wrong? Now, I don't know if this came in when gold and silver were trading quite a bit higher this morning. I don't recall the timing of that message, but my answer to that, now, you and I, we've taken a look at over the last couple of days. Well, first, let's just make sure we restate everything. Okay, silver sold off from its high this afternoon. Is that a big deal out here? No, I don't consider that to be any more of a big deal than anything else that you and I have looked at for weeks and weeks out here. What gold has done is gold closed out right 7 weeks ago, out at 12.35. We're trading at 12.51 right now. It has basically done nothing. It's not even a 1% move, is it, out there? Maybe it's 1% move on this. I don't know why everyone gets their skirts up in a tizzy about when price is moving a little bit higher in gold or when it's pulling back. But the question that you ask yourself on days like today or what have you, is who's buying? We answered that. We've answered that, I believe, fully. It's called the small traders, the non-reportable traders, people that believe they've missed out on something they're buying into, whatever it is. Look, our gold king, Tom O'Brien, would never buy gold at these levels. There's just no way. I mean, I haven't talked to him about it, but I'm going to say he buys on retracements. At lows, he doesn't buy when things are at highs out here. He may not be bearish on gold, but that's a whole different matter. So so it's not our TFNN listeners, because you're not hearing from anyone, I don't believe, to go out and rush and go buy gold right now. Now, when I'm talking metals, it is totally different than equities out here, than the mining equities. It's a total different picture out here. With regard to silver, here's the chart for silver. Large commercial traders, last week, they upped their net short position. I don't know what's going to spark it, but it is going to take a lot of people to the cleaners in the gold and silver market, the physical market. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So one time frame. Well, we were looking at the 30-minute charts Really, we're looking at the 30-minute chart for light sweet crude and the ES Mini. But I'm going to take you back to the 30-minute charts here for each of the equity futures contracts, just so you can understand exactly what is going on inside the market as we speak right now. The upper left-hand panel, that's the ES Mini 30-minute chart. The upper right-hand panel, that's the NQ, the NASDAQ. The bottom left is the Dow. Bottom right is the Russell 2000. What you can see is that each of these, you'll see a yellow box around each of these segments. Those are the consolidation zones that these are trading within. Now, the ES Mini had broken out of its consolidation zone really at about 12:30 yesterday afternoon. It came back into it right about 3:30. Broke out again at about 9:30 last night, 9:30, 10 o'clock last night. And it was back inside. So it's you would anticipate and expect that it'll get down and probably test the lows from April 19, 2 days ago. A little hammer candle that formed out there at about the 2085 area. That's really what you want to be paying attention to because, one, that's a hammer candle. So buyers were out there supporting that price level. When we get a close below a hammer candle, if you're long, you're wrong, is the expression out here. It may be that price gets down there, tested, and we stay in this consolidation. Now, the beauty at this stage of the ES Mini is I believe that's about a 13 point, so 2085 to 2098. If we see a close below that, the expected move would be about 13 points. Just like when it broke above, the expected move was 13 points to the upside. That never came to fruition. Does it always work like that? No. But what we have is we've got gauges out here. We've got good measurement gauges to help us understand where the market is likely headed to next. If we take a look at the Dow, same pattern with inside the Dow. Now, the difference with the Dow is that once price broke above its consolidation, that's the lower left here. I'll go ahead and expand it up on my screen for you. Once price broke above the top of that consolidation, about 12:30 yesterday, every time it was moving down, it was testing the top of the consolidation, which is a strong, whenever you break some type of resistance level, you like to see price come back. Maybe you don't like to see it, but, you should anticipate price will come back, test that level. And if it rejects it, then the move is more real. Now, even though it's more real, it never fulfilled that outcome by making that measured move. Price is now back inside of it. So at this stage here, if we go measure retracement levels, we'll do that kind of like we did when we looked at today's move inside the NQ. Right now, you're at the exact 0.786 retracement, which is 17,933 of this entire move that we're taking a look at. Will this hold the support? It may. It could. If it doesn't hold the support, you would anticipate that price will get down towards the bottom of the box, about 17,891. So figure you're about 17,9 to 18. So you got about 125, 35, 40 point move or so if, in fact, price breaks to the downside inside of the Dow, right? We always look at both sides of the trade. Now, the NQ out here, this also is in a consolidation. Hasn't broke. So there's nothing at this stage here that should make you or I believe that that the markets are doing anything more than just moving sideways in the consolidation zone, which can be very frustrating, right? Because the sellers and the bears think they've got something now, and maybe the bulls are just saying, well, you're just coming back to support out here. So that's what's going on the 30-minute chart. So is there any other helpful news that I can give to you and share with you, perhaps? Let's go see what's going on in some of the indices out here. Let's take a look at the S&P 500. So the S&P 500, you've got even though it's not labeled here, you've got an evening star pattern. After price has been moving higher, doing a less relative strength, you're down below Stevie's red line of support. Now it's really got to get to the 2073.77 mark. If you close below that, I don't anticipate we'll do that today, but hey, who knows? If you did close below 2073, that would be a pretty good indication that there is a change in trend happening. That is in the S&P 500. If we go take a look let's look at the indices out here. Let's go take a look at the Dow Jones Industrial. Let's go see what it's doing. So you've got, again, bearish reversal signal. First time that we've seen that with regard to this pattern. We did see one early one right about here on the trading day of April 7th, but price came right down into that black line out there that held the support. That says on this move lower, 17,826 could be support. You get below that, then changes the tune. I'm not talking about a dollar or two out here, but you do have bearish reversal signal as we speak today. That is that's a absolute indication that a top has formed potentially. If we look at the NDX 100, let's go take a look at the NDX. This already gave us a signal 2 days ago when it created that dark cloud cover, but it has had absolutely positively no follow through. No follow through out here. Now, maybe that's a whole different story when Google comes out with numbers. I don't know who else is coming out with numbers. I probably ought to have looked that up. But right now, traders are indecisive with regard to the NDX 100 out here. The number to be watching, 45.1186. You get below that, really good indication that the move lower is underway. Whoops, I keep minimizing that. Don't intend to minimize it. That's the NDX. How about the composite, the larger composite out here? What is it doing? So the larger composite, which can control the market, which can move these markets higher or lower, has given us absolutely, positively no signal of any kind of top just yet. It's showing us that price is stretched to the upside, but it has not given us any kind of sell signal inside the NASDAQ composite, which is really being affirmed or confirmed by that advanced decline oscillator that you and I were looking at. God, I keep minimizing it, that you and I were looking at earlier with it being above zero. So it's really like, shoot, a little total brain fart out here. Oh, come on. Oh, our good friend Lee Corso, right? And you know his expression, not so fast. Let's take a look at the Russell 2000, right? We took a look at the Russell yesterday with Garo from California. We noticed significant resistance levels that it had attained out here. You know, right now today you've got a bearish engulfing candle. So not much of one. It really needs to get down to about 11, looks like 1133 or so. So the Russell not doing too badly out here. Let's look at what else? Oh, how about the Wilshire 5000? Let's look at the health of the U.S. stock market. Let's go see what its message is. And its message is really prices right now moved down to what we'll call level 1 of support. It's trading on it as we speak right now. 21.347 is really the key number to be watching there. Close below that says, okay, there's a change in trend in place. I guess I just want to minimize it. Maybe you're sending me a message. You don't want me to go through this and do this. Did we look at the S&P 500? I think we did. Russell 2000, what else? New York Stock Exchange. Let's go ahead and finish it off with the New York Stock Exchange, see what kind of message we've got here. So again, now the New York Stock Exchange has been moving higher, doing it with strength, not with less relative strength out here. But today you do have a bearish engulfing candle. We've got an A to B equals CD to the upside out here. The one that I would be looking at starts down here, the trading day of February 11th. This is the easy A to B equals CD pattern out here. So, you know, it's gotten above the 1 to 1.618, A to B equals CD. I don't see any other really legitimate A to B equals CD pattern out here. What we can also say about the New York Stock Exchange, I believe we can. Let's go ahead and get a rectangle out here. You can see that, you know, there was this little consolidation pattern that was going on inside of it. So if we now just go ahead and take that consolidation and move that, go ahead, move it up to the top out here. You can see how yesterday, what price, you know, there's why we pay attention to those consolidations and those measured moves, because the New York Stock Exchange, you know, hit it Johnny on the spot out here. But no breaks of the consolidation inside those 30-minute charts. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. John Logan has just announced that he is hosting a workshop Wednesday, April 20th for all TAS Profile Scanner Plus subscribers, opportunities in the current market, and strategies to profit. In this hour-long workshop, John Logan will use the TAS Profile Scanner Plus to give you a current breakdown of the sectors in the market and the opportunities that are present, as well as providing subscribers with the best strategies to trade with to profit when using this powerful piece of market scanning software. Right now, you can sign up for the TAS Profile Scanner Plus at the front page of TFNN.com. The TAS Profile Scanner Plus is such an amazing piece of software that we're even offering a no-questions-asked money-back guarantee for all new paying subscribers. Don't delay, as John Logan's subscriber event is coming up soon. Sign up now for the TAS Profile Scanner Plus and be up and running within minutes using this powerful piece of market scanning software. With a 30-day money-back guarantee, you have nothing to lose. Sign up today.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Yes, Prince has passed at 57 out there. That's a shame when anybody passed. Anyways, the Dow is off 75. S&P is down 7. NASDAQ Composite is positive right now. Got a question from Alex in the den asking about Goldman Sachs. So let me see. The question says, Steve, would you consider a signal on Goldman Sachs as a sell short-term or long-term? Okay. So the question here is, is do we have a sell signal inside of Goldman Sachs, short and long-term out here? Here's what we know as we take a look at the daily chart for Goldman Sachs. Number one, what it has done thus far today is it's completed a 1-to-1 A to B equals CD, right? So we can use our lightning bolt tool to give us measurement projections of where price will head to. Now, just because it's completed a 1-to-1 A to B equals CD, you don't get your skirt in a tizzy. That does not mean that that's where price stops. It only happens 60% of the time that you make a 1-to-1 extension. Otherwise, the other 40%, it's going to do something else. Now, we know that it was a confirmed, or I believe it was a confirmed A to B equals CD when that B point, that swing point from March 4th, which had 5.2 million shares, was taken out with 5.8 million shares. So we know that you've completed a 1-to-1. If price moves higher, Alex, the next target level is going to be 174.03, the 1.272 expansion. Beyond that, 180.88. Do we have any kind of reversal candle inside of Goldman Sachs? We don't just yet. It's possible that if Goldman Sachs doesn't move any lower than the low today of 165.14 and closes at 165.14, then you would have a shooting star. And that would be your first indication. But right now, there's too much wick at the bottom of that candle. So it really is dependent upon, Alex, where it closes. Should we make such a big deal about a few pennies out there? My experience is, yes, we should. So the body of the candle is the essence of price out here, and we don't have a reversal signal in place just yet. What we also can see, there are reasons for prices to stall right here with regard to Goldman Sachs. Secondly, so you got the 1-to-1 A to B equals CD. Secondly, what we have is you've also got a TAS market profile high, a weekly market profile high at 166.72. So natural area of resistance. This is pushing higher today. It's doing it with light volume, but the last 2 days have had some nice momentum inside it. What else is stopping this out here? Well, one of the things to be paying attention to, and let me turn off the profiles here. Edit. We go turn those off. Is we've got this swing point that really did qualify as a looks like this qualified as a hammer candle because we have a longer extension on this wick out here, Alex. But this is right also what is which really was should have been a line of support. That's a trading session from September 29th out there, and that's priced out at 167.49. So we can see that Goldman Sachs is really up against three areas of support. If price hadn't got to this level, you and I would be looking at this area here as an area of resistance. If we take a look at retracements, right, we know we have a potential for a Gartley sell pattern because the A to B equals CD pattern has completed off of the bottom out here. Now, it's in between. It's probably about a 50% retracement, give or take, because it's between the 0.382 and it's less than the 0.618 retracement out here. Nonetheless, Gartley did not look. All good artists copy, great artists steal. And what I mean by that is that everything that we have in our lives right now, has been copied and improved. Everything. Just look at what we do here in the Tigers. Look at what we do at TFNN. Just to, look at the technology, and it's because people have improved upon things, and so everybody improves upon things. Larry Pesavento, he took the work of H.M. Gartley and he improved upon it by going ahead and integrating it with Fibonacci expansion, contraction out there. And what a wonderful tool! What a wonderful addition to H.M. Gartley's book. I'm sure H.M. is out there every day looking down at it saying, God, I wish I would have figured that out. He didn't have to. Larry Pesavento was able to take that. I've taken both the work of Larry and H.M. Gartley and have really focused on that C to D leg, but more importantly, integrated Japanese candlestick charting in there, which works on every type of system because that is how the market communicates to you and I. Japanese candlesticks alone basically mean nothing. Just as a Gartley pattern, I think alone, doesn't mean anything out there. You want to go ahead and have those Fibonacci numbers, and you also want to go ahead and have bullish and bearish reversal candles out there in order to really paint the way. That's how the market communicates to us. I don't know why we would use anything other than that, and we don't have that in Goldman Sachs out here. So it's up against resistance. Do we see any real sell signal out here? No. What's going on inside the entire sector? Maybe it makes more sense to go look at the XLF. Let's go do that. If we take a look at the XLF is in the process of making perhaps a larger A to B equals CD pattern, right? 2284 is a swing point for March 21st. That had volume there of 38 million shares. And we are up above that with 56 million shares on the trading day of April 13th. So sector-wise, this is saying, it's got some room to go to the upside. However, not so fast, right? Let me go. I need to switch over to, because I don't know my system. Let me see if this will populate here real quickly. Otherwise, I'll switch over to something else. Okay, good. So this is, so let's go put the XLF out here. But today's candle session, by the way, and we can, it's a key reversal now. So, Alex, if we take a look at what the sector is doing, right now you got a bearish engulfing candle, you got a key reversal. So maybe it's a smaller A to B equals CD that this is completing inside the XLF. Let's go do our wave count out here. I don't see a price relative strength divergent pattern out here. Clearly, we're not at wave number 7. We've exceeded that. The likely places to restart from here with regard would be right here after that fourth wave on March 10th. That only puts us at 4 waves where you can't get tops out here. So we don't have two patterns that we like to see. If we do take a look at that A to B equals CD, a different A to B, a smaller A to B equals CD like we did inside Goldman Sachs, now you've completed a 1 to 1.618. So I can equivocally say that that inside the XLF, you're getting a reversal signal right now. So the financial sector is saying, okay, time to pull back. Well, if I take a look at a couple of lines on my chart, 2306 is the target, 2262. Let's come back over here and put on the market profiles inside of the XLF, see what it says. And it says 2310. So you've got 2310 versus, what was I saying? 2310 versus 2306. So 2310, if you do go ahead and take a short out here, you want to see price get below that level. Below that level says 2262 on my system. On our TAS market profile, say 2260. You got to like that. That is the bottom of the box out here of the TAS market profile box. So, that's what's going on. But I tell you, the B point out here was another B point, or a large rate of B equals CD, was taken out with volume. And today, you've got a pullback on light volume, or at least that's what it looks like inside the financials. 30 million shares versus up yesterday was 60 million shares, and we are at 150 in the afternoon. So caveat emptor out here. Which pattern is it that's going to take off? Hey, look, if we get total sell signals inside the S&P 500 out here and all the other indices, then that's that game on. You get a close below that 30-minute group of consolidation patterns out here, that's probably game on to the downside. The NQ has got to participate. Steve Rhodes with TFNN. I'll be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
So as we come into the end of the show out here, this 2 p.m. Time frame, stay tuned for David White's show from 2 to 3, our Polar Bear, and, of course, Tom O'Brien from 3 to 5 out there, and Andy Heck from 5 to 6. The key level to be watching at this stage is going to be inside the ES mini. It's going to be that hammer candle that formed out here. This is on the trading day of April 19th. That low, we want to be paying attention to that. That's at 20.85. It looks like we're going to get a test of that area sooner than later. I don't know if from a volume standpoint, I probably can get back there. Let me expand this chart out. Let's go see what was going on February the 19th on a 10-minute. Can I get back here? Yeah. Okay. So let's go see what volume pattern we had as that area. Now, on a 10-minute chart, it was a big old key reversal, bullish engulfing candle. So contract-wise, 10 minutes, April 19th, you were looking at about 34,000 contracts. And in prices coming in there right now with 11.5, and you've got 5 minutes into that session. Nonetheless, and I don't really care, if you get below that, well, first, if you get below that with volume, then that says about a 13-point move to the downside out there, right? That's that consolidation level that we were paying attention to. We know prices moving down there with lighter volume. This level here may hold. If it holds, what does that say? That says that price would next bounce back up into the 2090 area, so about a 5-point bounce. If it gets above 2090 and then above 2091.75, you head all the way back up to the top of the consolidation pattern. And that would be how I would, and you don't have the other confirming signals coming from the other three indices as we speak right now. So the ES is the one to be paying attention to, and then the closeout there. Let's take a look at a couple of equities here that are moving. We talked about some things really moving to the downside. Alliance Data Systems, ADS, is the ticker symbol. Here's the daily chart, down with about 2.3 million shares today. Holding its own, but down with big volume. It looks to me more likely than not this is headed to about 187. The bottom of its weekly profile, you're at 202 right now. ADS was the ticker symbol. Let's take a look at Lithium Motors, down about $11. This is also down with volume. It's tried to take out this most recent swing point that only had 349,000 shares. You've done 1.7 million shares today. Nonetheless, it ought to go make a run for the lows in February, down around 72.39. That ticker symbol is LAD. Sarepta Therapeutics. What a psycho stock this is. This thing has gaps just everywhere, to the upside, to the downside. Big volume today to the downside, 18 million shares out here. If we pull this back further, where is this going to? We need to probably put a weekly chart up on our screen, and son of a gun. So this Sarepta Therapeutics, I do remember this because I know this was one of Bud Rolf's stocks out here, one that he was following and trading. But back on July 23rd, 2012, I remember that because I remember being in the office at TFNN, and what a big move this thing had to the upside. Or get an email from Bud on it. Went from a low of 345 and closed out at 846 out there, and then just continued to move higher in nonstop fashion until it got up to 52.72. And then in nonstop fashion, it started to move lower. Came all the way back to the breakout area. Look at that. Came right back to that wide-ranging candle out here. Well, now this is really this is a level where it had broken out from. Right here, you can see that little window, that little gap right there at about 1098, and it's trading right now at 1090. This equity is very likely headed all the way back down to that original breakout area at about 345. What a psycho stock. Hey, folks, stay tuned. David White will be up next. Thanks so much for tuning in. Have a great Thursday. I'll look forward to seeing you on fantastic and fabulous Friday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.